What I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Okay guys, Jay Martin here, CEO of Cambridge House, and I'm joined right now by David Morgan, the chief editor of the Morgan Report. David, welcome back.
Jay, it's always fun to be with you. Thanks.
Yeah, I appreciate you making the time. So I wanted to bring you back on because we spoke in January. You were among a ton of interviews we did in December and January. We did about 100 interviews with the intention of gathering as many forecasts and perspectives as possible so that we could then sort of pick and choose what we could apply into our portfolios. Now, a quarter's gone by already. We're at the end of Q1 of 2021 already. I wanted to pull back a select few personalities onto the platform to get an update, right? Because it's been a crazy quarter. Lots has changed and some things went to plan and some things didn't. So I'd love to get your perspective on what's changed, how your conviction may have shifted, and how that impacts your outlook for the rest of the year. Maybe a good place to start would be, we're sitting here, I guess, at the end of talking about the gold market now, a 7-month depression in the gold price since August-ish. My question for you is, what are you doing now? Is it time to buy? Is it time to wait? And how are you actioning right now?
Yeah, that's a great question, Jay. Right now, building cash, but nibbling. It's tough to be all things to all people. There's people that just caught on the gold story a year ago, and maybe they got in too high. And then there's, first of all, I'm long-term, now I do make intermediate term calls and I'm pretty good at it. My long-term calls for tops has been very good. My bottom calls haven't been that great, but the main idea is to have a goal and don't overdo any one sector. Now I know I'm overinvested in this sector. I know it well. I can take the risk. Some people can't. So if you're that personality, 10, 15% weighting or whatever is probably adequate. So one thing I'm going to put in the next report, and I do it on my videos for our paid members, is covered call writing. So you can have a stock like one of our top tiers and what I call rent your stock. So you can go a month out and and believe it or not, Jay, you're going to get, most of the time, you're going to get like 3 to 5% in a month. And the reason it's so high is that gold stocks have the highest beta, or the highest volatility is what that Greek letter means, of any group in the stock market. And because of that volatility, you pay more for the option, which means as the option seller, you receive a big fat premium. I had an options expert I met at one of your conferences, and had him do a mastermind with me, and he did the portfolio. This was about 3 years ago. And all I did is my top tier, which is only like 5 companies, but he works at it. He writes an option out 1 month every time. It yielded 40% in a sideways market. So, there's that aspect. And I'm going to be publishing that as an outline in the next Morgan report. Something you can do your own. You don't need to buy the report to get it. In fact, it's going to just be an overview. But that's some way to generate some income and also kind of soften your loss, because every time you write that call, your cost basis comes down. So if you're on $100 stock and you write an option for $5, then that time it's 95, and you write it again, it's 90, and you write it again, and you can do 4 or 5 times in a year, and your cost basis goes from 100 down to, let's say, 80, and that's maybe your average price right now because we've been in this 7-month lull, and you don't feel so bad. Now you can't do that with some of these junior companies don't have options, but in the big companies you can do it. So I've structured the portfolio conservatively, Jay. I remember in the early days at your shows way back in 2002 and 2003, and some of the guys in my business were just kicking it. And I was doing good, but being conservative, maybe not as good on a percentage basis, but I'm still here. And in the long, long run, I was doing pretty good where a lot of these guys left the business. So, it depends on your perspective, depends on how you like to invest.
Got it. Okay. Now switching to the silver market. David, what has surprised you most about the silver market so far in 2021?
Well, I have to give you 2 answers. One is this Reddit group, Wall Street Silver, that came out of nowhere, basically, from this GameStop situation. That was unexpected. And of course, it's been sort of one of my dreams about what's wrong with the metals, and particularly silver, is the lack of awareness. No one really hears the silver story unless they're at, one of the Vancouver Resource Investment Conferences or maybe one of the other investment shows around. Yeah, I know they find it on the internet, or they're kind of a metals head or a resource investor. But I mean, the general public just doesn't hear the silver story. Just somewhat the gold story, but it's usually diluted. And so that was number one, because awareness is key, education and awareness. The second thing is, and I hate to sound like a whiner, but it's the price situation we're presently experiencing.
Okay.
I mean, look, common sense would tell almost anybody, not even a futures trader like me, and I don't do that much futures trading anymore, but I used to actively, to see a buy like we had in 4 days in silver, taking a price or taking the amount to 100 million ounces in a 4-day time frame. If you did that much volume respective to the percentage of what's available in the corn market or the cotton market or the wheat market, you would have probably been up limit 3 days in a row. Silver made this big up move on the aftermarket over the weekend, up to a touch around 30, and then came right back down. It's been like 28, maybe 28.50 is kind of its high. So it's been in this trading range between 25 and let's say 27 and a half since that time frame, which is only like 5-6 weeks ago, if memory is correct.
Yeah.
And this is rather frustrating to new silver investors, but I got to back up and go to the conviction trade of 2020. And when at Davos, which we now know, most people know as the World Economic Forum, when Guggenheim's chief investment officer, Scott Maynard, was asked what's his conviction trade for 2020, he said silver. He said that in January of 2020, and it went from roughly 18 to, I forget what it closed at, 28. We had about a 40-something% move over that year to year, January to January. Been flat now. It's frustrating. It doesn't make sense, but there's been a lot written about that. You got a question or two on that idea, so I'll hand it back to you.
Yeah, cool. Well, you're right about the sort of mass audience awareness tuning in. And you drew some parallels recently between the silver market and the 2008 crisis, specifically with analogies pulled from the movie The Big Short about the housing crisis in the US. I was wondering if you could recap that for our audience today.
Sure. I've watched the movie 2 or 3 times. I actually own it, one of the few movies I've bought. But there's a part in the movie after Dr. Burry gets Goldman Sachs to write them the option to be able to short the mortgage securities that are basically garbage, and he knows it and has known it for a long time. And then, of course, further on, he says he wants to guarantee that they're still going to be around to pay him. I digress. So what happened is, as the movie progresses, the market goes against them and against them. And it's not only Dr. Burry and his investors, other people on Wall Street are catching the whole idea as well. So there's more on board on the short side. So market continues to go against them, lots of frustration. And then all of a sudden, I think it's Countrywide Financials, headline news, biggest news on the ticker. It's going bankrupt. Major brokerage. It does a lot of subprime mortgages. In fact, I think their whole business, I may be misquoting, but Countrywide was pretty much notorious for subprime type. So, very difficult paper. The credit scores aren't that high. Chance paybacks aren't as good and all that stuff. And this is an absolute in your face. It's happening. It's right there. And the market actually goes against them. And these 3 lead players in the movie are like baffled. This can't be true. And I forget the exact line, but it's something like, this is the most corrupt thing ever, or something else is going on. And from the movie, there's something else is going on, that one of the banks wanted to be on the short side now that they saw that these kooks were correct.
Yeah.
And once they got on the short side, then the whole thing started to tumble down, and away it went. And everybody that was short the mortgage securities were making a lot of money. So the analogy is similar, that, we see all this physical demand. We see offtakes from the COMEX itself. We see premiums on 1,000-ounce bars, commercial bars. We see the PSLV rewriting the prospectus. We see the SIVR, Aberdeen Trust, rewrite the prospectus and basically whine about the speculators taking silver, for crying out loud, when those funds are supposed to be long silver. They're supposed to be long only funds. If you can't buy a commodity, you can buy a stock, because an ETF is a stock representation of fill in the blank. And in this case, it's silver. So all those things adding up, Jay, just give me the idea that we might be at that point in the movie The Big Short, where even though it looks like we're wrong or something's wrong, we may not be that far away from something breaking free. I would say, I do technical work. Don't hang my hat on it. I'm pretty good at it, and the market knows more than me. But I'd say if we got a 2850 print 3 days in a row on the continuous contract, in other words, a spot month, and it's decent volume, I think that's it. I think from that point, we'll see, I could be wrong, we're probably into the 30s pretty quick. And there is some congestion at 30. I mean, there are people that bought silver at 30. And now, with $26 or $25 silver, you're paying 30 or 31 anywhere if you're a retail investor. Even at some of the banks, you're paying a huge premium to get, silver maple, silver eagles, even a RCM, Royal Canadian Mint 100 ounce bar has got a huge premium on it. So something's just not smelling right in the silver market. I'll leave it there.
Okay. We'll have to wait and see. Now, talk to me about your portfolio for 2021 and how you've allocated cash between, call it early stage explorers through to miners. What are you holding now? What are you shopping for?
Okay. Well, my big positions, I've been writing some calls, not as aggressively as I outlined. The mid tiers are still doing well and getting great news. So we're keeping our paid members informed about that. Haven't done much in the speculative sector. There was one that basically wasn't living up to their mission statement, so I dropped it off the list. I hate to do that because once I but I'm not married to any of these things. If there's something that changes, I have to adapt, correct, and continue. So I corrected and continued. I just got on our mastermind, which is primarily fund managers and AIs, accredited investors. Just had a presentation yesterday on a new silver situation over by me in the Silver Valley. That looks quite interesting. It's not got the paperwork out yet for a private placement opportunity, but it'll be coming. So I'm definitely going to take part, which, those people on that call know that. And it looks like, very high potential. I mean, I know that area pretty well. I'm not a geologist, but I've been over there many times. So that's sort of one I'm kind of very intrigued by. For current, it happened like Tuesday and this is Wednesday. So it's yesterday. Yeah. So that's it. I am holding cash, building cash, because I think we're nearing the bottom in gold, but I also think that it's not going to be a rocket ship up. I think it's going to hit the bottom of the trading range. And I think that's where we are or close to it. And then it's going to come up to the top of the trading range over time. And of course, between that, it goes up and back and forth with higher lows. And then it's got to break through the trading range. So I do expect better gold prices by the end of the year, but nothing significant. So I'm willing to focus a little bit more on silver. I think it's got more upside at this point in time, but not so much that I don't have enough cash to take advantage. If we get a large stock market sell-off and it takes everything down, including the miners, or I see something I really want to invest in, that's an opportunity that presents itself.
Okay. I love it. Look, David, I appreciate your time. You know who I was just talking to before this was Daniela Cambone. And I told her, I'm talking to David Morgan next. And she goes, you have to share this story with him. She said you were her first interview ever in the business when she, going back would have been like 15 years at Kitco. And they were positioned at the bottom of the escalator at the PDAC. And she said she pulled you aside, was super excited to convince you to do an interview with her. And then she couldn't get the audio to work. And you guys had to try it a couple of times. Do you remember that?
I do indeed. Yeah. I mean, in the career I've had, which I'm very blessed, almost everything has happened at one point or another. The PowerPoint quits working because the bulb goes out in the unit. And then, the lectern, the mic quits working. I mean, not everything. So I just got to, you just admit that, hey, something went wrong and try to pretend, or instead of pretending, everything's okay. People know you're human. I mean, most of them will be very empathetic with you. And of course, knowing she was probably nervous, I just handled it to the best of my ability that, hey, it happens. So what? I've got time. So relax, and it all comes out. We all have our stories, but I hadn't thought about that in a while, but I do remember it.
Yeah, well, you're one of her favorite analysts that she's interviewed. She shared that with me, so I just wanted to pass that on. Look, I appreciate your time, David. Thanks for coming back on, updating my audience, and look forward to doing it again.
Thank you, Jay. Appreciate it.